Good afternoon, all. Camelback Trading 2724 and the Pit FuturesTrading.com coming to you this Friday, February 28th, last day of the trading month. And boy, what a wild end to a wild week. We still have the gap. You're looking at, this is the market profile of the SPY ETF here on Window Trader. This is end period, right? I don't count that. We don't use it in the SPY. I know they use it in the ES, but we don't. We do still have the gap. It's a lot smaller, but we do have one. We have 3 gaps on the daily, and we have one on the weekly. We had a price probe yesterday. It's the first downside price probe that worked, as it was firmly accepted as we gapped lower today. We pushed down, got through that key 287 level 3 times in A, B, and C period. Never saw it again. So that's one little feather in the bull's cap. 2, we stayed above the opening most of the day. They tried in J and they tried in M, but got rejected out of it both times. We never lowered the POC. In fact, we raised POC today. And we closed, its H is low. It's not where we're yellow here because we had another bad tick. And so that changes the POC. The POC is at H is low, so it never lowered it. They looked like they were going to try in L&M, but that certainly didn't happen. We go out with a price probe to the upside. So, but here's the deal with this volume and what's a little concerning. First of all, the volume is absolutely off the charts. So for the month of February, we did 2.1 billion. This week, we did 1.2 billion, 1,237 million with still the after hours to go. So we're going to probably end up doing close to 1.3 billion for the week. And then for the day, we're up to 355 million. So each day I was like, this is incredible. Yesterday was the highest at 288, I think, or 289. We did 355 today with the after hours still to go. We did 284 yesterday. I'm going to figure we're going to do somewhere in the range of 370 to 375 million for the day. Now, that's a little concerning. Considering the SPY at one point was down just under $48 and closed down $37.22. You want to see selling drying up the lower we go and the lower prices we get. It got bigger every day. So it obviously, I mean, this isn't more proof to especially newer traders how when big money comes in, they don't care where they sell it. Especially when they have profits in it, which they do. So I think a lot of this rally here, there's some very, very smart people who shorted this market starting last week, right? And continued to short it last Friday, Monday, Tuesday. They had tremendous profits in it, so they didn't care what they paid late in the day on Friday, right? You have that kind of money in your pocket after being so smart shorting it, you're covering. So I think that is what brought this market up late in the day, was bottom feeders and short covering from earlier in the week. Not from today per se, but from earlier in the week. So I do not think the selling is done. I hope we get some kind of, it's funny to say I hope I get a rally next week early on, considering we trade as low as 285.54. We traded at 299 in the end period. We closed at 296. And, I would used to hope for $1 or $2 rally. Now we already rallied 11. I'm looking for another 10 next week. I do think we can get that. At 287 level held very nicely. So I think we can get at least into Thursday's range and find some sort of balance at least early in the week. I would certainly like that. As far as my trading, I scalped some calls below the opening in A, B, and C. Every time it got below the opening, near the 287 level or below it, I bought it, shorted above it because they played that game. That's the only trading I did for the day. I do have two call positions that I spoke about yesterday that I still have. And incredibly, even though we finished down on the day, they were in the green. So they're not giving up yet, especially because of this volatility. I don't need much. I don't need much next week if this thing was to rally to have them be okay. So let's go over destinations, which are incredibly now all over the place and far and wide. Okay, first off, the upside we'll start with. 296.33. That's today's high. And then filling the gap at 297.51. So it's still a 118 tick gap. But these days, that's nothing, right? I mean, we traded up in end period, we traded up to 299.05. But that does not constitute filling the gap. That's not regular trading hours for me. Now, above that, then we have 300.65, which is the price probe from yesterday, which worked out. For the first time in probably 2 years, a downside price probe worked out for $15 worth. Actually, what am I saying? $20 worth. So C's low from on Thursday. Then remember I said we didn't really have any destinations yesterday? Well, we still don't. So if the buys, my next destination is Thursday's high of 309.65 and then filling the gap at 310.70. So you can get some real huge acceleration really on both sides of the market again. Okay, so that's the upside, and they're far and wide. Now for the downside, our first destination is E's high. That's the price probe, 296.14. Then we have 9 wide at 292.27. Then I'm going to use J's low as the afternoon pullback low of 288.03. And then and then the next one is today's low, which is now a monthly low of 285.54. So I guess the question is, did we put in a short-term bottom, right? Holding 287, and now we have a monthly low. Well, I don't know yet. We'll see. I'll stop there right now on the downside. Well, I'll give you, you know what? Might as well give you a couple more. Below that, we have 284.82, which is another monthly low. Then 283.47 weekly low and 282.39 weekly low. So we'll stop with those. So those destinations I gave you, there's not a lot of them, and they range from 282 up to 310 or whatever. Pretty amazing, right? $28 range for not a lot of destinations. So price, again, will be going all over the place next week. All right. Let's look at the charts. And by the way, before I get to the charts, it did turn out to be an incredibly huge rotational day, right? After we put in the low in B and the high in E up until M period, right? They tried again in F, G, and H, but then it just became some huge rotations. I mean, for $11 range. A balanced, huge rotational day. All right. Now, I think the charts are fixed. I spent some time fixing them after the close. We'll see when we get to them. All right. Monthly. Now, monthly to me, even though we're down $40, is in balance, right? Markets, I've always said, markets, a good friend of mine said, markets don't go bull bear, they go bull balance, bull balance, bear. And this is a tough one to comprehend, but on a longer time chart, that's what we are. Yeah, we're down 40 points this week or whatever, but we're in balance now, right? So we can encompass as far back as we traded as low as, so that 284.82, we traded as low as 285.54. So basically, to me, we're in a 5-month balance, with this month's high and all-time high being the high, and then 284.82 being the low, right? So if you round that out, 285 to 339, hey, we're in a $54 balance. That's a huge balance. Question is, do we hold it? If we take out this month's low, then becomes where we're down and it changes. We also have an outside month down, which is very bearish. However, I've never seen an outside month weekday of this magnitude close so far or above the previous month's high or low. I haven't. So we closed at 296, say. We're already $24 under last month's low, and we got even further lower than that, another $11. So we're $35 below last month's low at one point. So I guess what I'm saying is, it is bearish long term, but how much weight do we put into it that we already drove down so far? I don't know. I don't have the answer to that. So I think more importantly than the outside month down is now this month's low. If we're able to hold this month's low, well, then you're in balance, and now you start grinding your way back to a top of a balance, right? If we take out last month's low, then that outside month down is still pretty powerful, and we go lower. Weekly. Let's see. It looks like the weekly is right. You talk about carnage. So the weekly is down. With a gap as my main focus. Huge gap. We traded below. I'm hoping that you have that whole thing in there from 287. Right? From when we first started, we traded below that November, December carving out of that first initial 287 level of 2018. Well, we got to it. We got under it by $1.50, right? 285.54. But only spent 3 time frames. And for now, we closed $9 above it. Now, in the past, if I was $9 above it, I'd say, my goodness, that's awesome. It held, and we're going, and everything's fine. You have to put things in context. $9 above that in this kind of range doesn't mean much, does it? We were doing $9 rotations today. So everything has to be put in perspective, and everything has to be put into context. So yes, it's comforting we're $9 above that 287 level. But I wouldn't take out the party hats just yet. But that's still a huge, huge level for me. I guess another big level, as I'm looking at it now, is I have that other line, is that 302 level that was in July, and then again in September, 302.46. So now that was another level that I had put here between this balance, the 287, and then around the 302.50 level. So yes, we held the 287. Now the next step is to get above that 302 level. So that'll be interesting to see next week if we're able to do that. And then the daily. Huh. Wow. $48. Right? Actually, from our high of last week, 339, to the low today is 54, just $54, say. In 8 days. 8 days, we went from our all-time high to taking $54 worth of data, value, and everything off. But you see where we also bounced off of? Look at this trend line. That's October 3rd. I've had this trend line in there forever. Right? We had gotten under it back here. Got above it, and then finally got below it the day after our all-time high. You know, it's one thing to go below it. It's another thing to go all the way back from where it started to test. But we did bounce off it, at least the first time. Is this market oversold? Of course it is. But like I said earlier, the selling's not done till the big boys want to stop it. They don't care about oversold. They don't care about reference points or destinations. So you do have to keep that in mind. Now, on a buyer's side, I'm long some calls. I'm not in bad shape. I'm still down on them, but I don't need a lot out of this next week. The problem is I only have next week to get it because they expire next Friday. So it would be nice to at least fill this gap in regular trading hours, and at least all I would want is a test around the 200-day moving average and above it a little bit. That's what I would like. And maybe we get that next week. But if you do get that, or even if we get above it and fill this gap, don't think that everything is fine and dandy again. This market, there's a lot of damage that has been sustained in this market. And I think it's going to take a while. And especially the fact that the volume has not dried up tells me maybe they'll take their foot off the gas a little bit, the sellers, the big boys, to let it come back up more. And then we see if they step back on it again. And one last note, when I was talking this morning, when I was ranting a little bit, the one thing I forgot to say is, like these circuit breakers that are put in, and I know they did it after the flash crash, I totally disagree with it. Totally disagree. In certain stocks, when there's major news with a CFO leaving or accounting scandal, I get it. To stop an entire market, the S&P 500, because it's down 7%, absolutely not. The human functions out of it. They wanted machines. They have machines. Deal with it. I don't care if we're down 20%. We should not stop trading. That's just a little personal opinion on the rest of my tirade this morning. Anyway, I hope you guys and gals survived this week. Kudos to those who made some nice money. Rest up. Have a great weekend. At least we know volatility's back. And I'll see you prior to the opening on Monday.